Hello everyone, this is Carter Finance. Today we will be talking about the fundamentals of the earnings per share, the P/E ratio, the market cap, the beta, and the volatility. I'll make separate videos on beta explained and the comparables, or using comparable analysis. Anyways, the stock today is Walmart. Very simple stock. Ticker symbol WMT, with a ticker simply just an abbreviation of a company, so WMT. Now, the volume for today was about 5 million shares were traded, and the average volume is 7.5 million shares are traded. Now, why are these volumes increasing and decreasing over the years? You can make the argument for quant trading. They're able to get in and out of trades very quickly, be able to execute trades very fast, in large volumes as well. Day trading is also another huge factor. They're increasing the number of shares they're buying, also making companies more volatile. Now, why is volume important? Volume is important because it allows you to get in and out of trades. Now, if a company has a limited amount of shares they have a limited amount of shares that are trading for that day, that's kind of suspect because it's going to be harder to get out of trades. Now, with a volume of 5 million, you're going to have no problem with buying a share in probably a nanosecond. Very fast. Now, like I said, the average volume is about 7.5, and they'll be fine. Like tomorrow, it could trade at 10 million shares per day, just an average. Now, market cap in billions. So I'm going to show you how to calculate it, and I'm going to show you the evidence to how we got there as well. So how to calculate it. You're going to take the share price of $144.55 times the outstanding shares. The amount of shares is 2.79, and I'll show you how to find that. So you take, I guess I'll just back this up a little bit, and we'll go with the share price times the outstanding shares in billions. So you have 403.29 billion or 403 billion. Now, don't get this confused with TEV. So total enterprise value is market cap. So this minus any cash plus debts. That is enterprise value, and I like this as a better metric, I would say, like EV to EBITDA, and I'll make videos about that if you guys want me to. So market cap is the total value of these shares. That's the difference. And I'll show you how to calculate it, and let's show you how to prove that you are correct. So let's go to Walmart. And you see the market cap is 403 billion. Now, how do we find the OS, which is outstanding shares? So we go to Yahoo Finance, we go to the stats, and we go to the outstanding shares. So we go to stats, statistics, and we just scroll down. We scroll down to the shares to stats, and we see shares outstanding at obviously the same amount we had before, so 2.79. And that's how you calculate market cap. Now that we learned how to calculate market cap, what is beta and volatility? I would say volatility is how much a stock moves in price compared to the S&P 500 index. If you don't know what the S&P 500 index, you should maybe study up a little more. Basically what it is the top 500 companies, and an index or an ETF just tracks it. So the beta of that is 1, meaning that's what the average volatility is. And the Walmart beta is 0.48. And I will make a separate video showing, number 1, how to calculate that, and number 2, the importance of beta in terms of kind of saving your portfolio and using it as an advantage. Okay, now we can get to EPS, or also known as earnings per share. So you're going to take the net income, this is also in billions, so it's 10 billion, and I'll show you where to find that on Yahoo Finance, divided by the outstanding shares, also in billions. So you're going to take, hopefully you guys know how to use Excel as well. If not, it's perfectly fine. You can learn, and I can drop some free courses as well. Not made by me, made by CFI, and also you can just look on YouTube, there are plenty. So you take the net income, so this one right here, divided by the outstanding shares, which is 2.79, same as here. And you hit enter, and you get 3.6 EPS, so that's earnings per share. Now, how do you find the net income? That might be very difficult. If you've never heard of an income statement, now you have, because I'm about to show you. So you go to Yahoo Finance, you go to the finance section, and then you go to the income statement. So Yahoo Finance, and then the financial section. And by the way, I don't really use Yahoo Finance. I just use it as a teaching point or for the lesson because it's very, very good, very simple. I use Ticker Terminal. It has all the metrics that I love and that I use daily when evaluating companies. Sorry for that cut. Okay, now we're here at the income statement. Now you see here, I'm going to kind of go over the income statement and what it is. The total revenue minus cost of goods sold is your gross profit minus a lot of things, your net operating interest, your pre-tax, then the tax taken out, and you're left with your net income right here. So net income is $10.05 billion. That's how you find it. So we found the EPS now. Let's move on to P ratio. So P ratio is very simple. We found the EPS. We already know what the price of the share is. So P ratio is price earnings ratio. I would say it's used to compare how expensive a company is. So the EPS of this was around 40 or so. So let's say a Costco is like at a 60 EPS. We know that Costco is most likely overvalued. There's also PEG ratios, which is a ratio I don't certainly love, but like I said, they're financial metrics, so we have to respect it. So we take the price of the share, which is $144, divided by our EPS, which is 3.6. We hit enter, and we get 40.13. And we could go back and we could check on Yahoo Finance to see if we are correct. And we are. So if you like the video and you like seeing my face or you like seeing me talk, please give it a like, please subscribe. And I really would appreciate it. This is a pretty, my first two videos were like discovering scams. That's not what I like to do. It was just helping people. But hopefully this helped people. And if you, also, if you know any financial metrics that you like, please drop them in the comments. Like I said, I'm also pretty young. I'm 19. I can still learn. I know quite a bit, but it wouldn't hurt my ego to learn even more. So thank you guys for watching, and have a good day.